everyone, this is John Feneck with the Feneck Commodities Report, and with us today is Don Durrett, my YouTube partner, founder of goldstockdata.com, and we also have the CEO of Silver Storm, Greg McKenzie. Tickers are at the bottom of each of his pages there that we're going to see in the US and in Canada. And welcome, guys.
Yeah, welcome, Greg.
Thanks, John, and thanks, Don. Excellent to be with you here today, and looking forward to talking about Silverstorm.
That's great. Yeah, we look forward to hearing about it. So obviously a beautiful time for the silver price, and the timing could be really, I think, optimal for our listeners. So can you give us a 7 to 8 minute overview of Silverstorm, please?
Yeah, sure. Silverstorm is a mining developer and explorer. We have two assets. Both are located in Durango State in Mexico. We have an asset that's going into production in 2026, we expect. And we're fully financed to move it into operations. It's a past producing mine. And I'll talk to you about some of those details in a minute. Our second asset is the San Diego deposit, also in Durango State. And San Diego is really a huge silver resource, and it deserves more capital investment to move it towards a bigger resource and ultimately putting that asset into operations as well. So very exciting with these two assets, and obviously the environment for silver has significantly improved over the last few months. But we are big silver believers, and we've been at this for 5 years, and it's nice to see that we're getting a lot more attention to our space in the mining industry.
Absolutely. Are there any slides you wanted to touch on in terms of telling the story?
Yeah, so I'll go through a little bit more detail here. As an overview, La Parrilla is a former producing mine. It produced 34 million ounces from 2006 to 2019. That was under the tutelage and ownership of First Majestic Silver. Mm-hmm. We acquired the asset in August of 2023, and we did 18,600 meters of drilling from that time till when we put out our new 43-101 earlier this year. That was March of 25. Now, we will be targeting putting the mine into operations in the second quarter of 2026. And if anybody ever comes to site on a site visit, you'll be able to see it's such a fantastic setup. I'll just switch to that slide. You can sort of see the plant that's there already, and all the infrastructure and development that's previously been done. In our minds, it's about $150 million of replacement value if you had to replace it at least. And couple that with having to take a lot of time to do a permit and to build something, we have a 4 to 5 year head start on anyone who's at a feasibility stage. One of the things we're doing to expand the production on the sulphide side is to expand the circuit to 1,250 tons per day. Previously, it was 1,000 tons per day on the sulphide circuit, and there was also an oxide circuit for another 1,000 tons per day. So that's a significant upgrade there. Much of the resources that we drilled up were sulphide, so it makes sense. It ties in really well. The resource itself was a big success. We were able to more than double the indicated resource, and we were able to increase the inferred by 58%. So it wasn't just converting already existing resources, it was actually adding ounces on the books. We expect the timeline to take about 7 to 9 months. We recently put out some news on the financings, which I'll touch on shortly, and as well an offtake with Samsung, one of the premier offtakers in the world. So we're set up in a fantastic way to achieve operations next year. This is our capital structure. Our market cap's around 200 million. There's been some volatility the last couple of days. We have cash on hand of about 30 million Canadian dollars. There's another 40 million dollars of in the money warrants. As you can see on the right side of the screen there, Eric Sprott's our largest individual shareholder with 11%, and First Majestic owns about 19%. When we did the deal with First Majestic, it was always their intention to be just below 20, and they were able to achieve that, and so now they're at 19%. We've had this year a number of institutional investors come into the name. They're not listed here, but probably another 30% is with institutions now. And recently, actually this morning, Red Cloud put out a 55-cent target on our stock. We believe the stock's going to go much higher, but that's the target that they have on the stock.
Can I ask a question real quick on that slide?
Sure.
So on First Majestic, is there intention to hold that 19%? Or, sometimes you see majors get rid of a position over time, not all at once, but we saw that with Avino last year, right? So we have a little bit of PTSD from that. What are your thoughts there?
Well, what I would say is First Majestic's been a outstanding, really outstanding partner, outstanding shareholder. When we did the deal with them in 2023, their stated intention, is right in the agreements, was to go down to just below 20%, and they recently did that. They could have done a lot sooner, and my understanding is that they sold a bit of their position to institutional shareholders who wanted to get into the name.
Okay, so basically, Eric, I used to work for, he's not selling anything. First Majestic, probably not selling much at all. That locks up 30% of your float. And you just mentioned how much was being put into institutional hands? Was that 20 or 30%?
We believe there's another 30% in institutional shareholders' hands.
Okay. Fantastic. Proceed. Thank you.
Okay. Very importantly, we ran a process over many months to secure a offtake with a premier group. There were several different groups who were interested, and ultimately it was narrowed down to where we did a deal with Samsung. Many of you might know that Samsung also is working with the Avino that you mentioned. So they're just a great partner, and we're very happy to have them as another stakeholder in our business. It's a $7 million US prepayment facility, so it gives us a lot more flexibility and room to bring our La Parrilla project into operations and have significant cash resources left over. We've been staffing up, and two of the most recent hires is a new general manager who is a mining engineer, Arturo Zamudio, and Shane Gurlal, who's also a mining engineer and a qualified person. Shane has many years of experience with underground mining, with the Vale, and working with consultants after that. And Arturo is well known in Mexico, has managed several of the underground mines and other operations in Mexico. And we're very lucky to have these two recent hires. A number of other hires have been happening at the mine and will continue as we ramp up to operations. In terms of ESG, we take it very seriously. We're on point with everything, and we think it's just a great opportunity for the local community. 85% of our staff come from the local community, and we feel that it's very important for mining companies to be good corporate citizens, and we intend to continue that position as we move forward. On this slide, you can just see where we are located. I do want to talk about San Diego because it's the monster deposit in our portfolio. La Parrilla will get us really good cash flow once it goes into operations. But San Diego is where the massive upside is, in that it has over 200 million ounces of silver equivalent, based on a 2013 43-101, and then we did drilled it for 2 years, and we were very successful with the drilling. And so ultimately, the cash flow that comes out of La Parrilla will allow us to do a lot more work at San Diego. Back to one of the important points about La Parrilla is that it's based on its resource, it's about 2/3 silver and 1/3 lead and zinc. So most silver, lead, zinc mines, indeed, our San Diego mine is also one of the mines that are 40 to 50% silver, and then the balance is lead and zinc. Here at La Parrilla, it's 2/3 silver and 1/3 lead and zinc, and even more now with the increase in silver price, we could expect the contribution coming from silver to be up to 80%. So it is an anomalous situation to have such a silver-rich silver, lead, zinc mine.
Hey, Greg, could you fast forward to San Diego? Because I know you wanted to talk about that, and I'm sure Don has some questions on that.
So here's the resource statement that the prior management had done in 2013 on San Diego. 210 million ounces of silver equivalent. And this was based on 33,000 meters of drilling, hitting over 23 different zones. And it was just an excellent place to start for us when we took over the leadership of the company in 2020. We then went ahead and did some drilling. And if you look on the left side of your screen, you can see the geological model that we had when we took over. And those red ellipses were the target areas that we were looking to drill up. And if you look at the right side of the screen, I'm trying to make a long story short, but on the right side of the screen, you can see that there is a 500-meter zone that we now call the 1849 zone. Previously, it was the 1849 target area that we drilled and we hit. And we were hitting, long intercepts of average to good grade silver. In this top hit here, 169 grams over 42 meters. We had a hit in the middle, 84 grams over 134 meters. And then down at the bottom, 83 grams again over 100 meters. And that defined now for us a new zone has 500 meters of vertical of mineralization, continuous. And we go back to the Fernandez zone, which you can see on the left side where it's named here. Go back on the right side of the page, you can see this whole envelope that we have that we're showing here has very long intercepts. 150 grams over 320 meters. And some of the drill holes that we were drilling, they went down to 1,100 meters, bottomed in mineralization. And so that's why we're so excited about San Diego. One of the largest undeveloped silver resources in Mexico. In this hole at the top here, hole 2157, we didn't expect that we would hit anything up there, but we hit 72 grams over 273 meters, like really long intercepts, continuous mineralization. And that just told us, you know what, there's something special sitting right above this Fernandez zone. And maybe this area that we thought was barren previously carries economic, strong grade of silver. And so when the geologists, I'll just skip down here. When the geologists, this is the hole 2157 right here. When the geologists went back in the database and they looked at some holes from 2006 and 2007 from the prior management team, they found that it also carried average grade silver, but over very long intercepts. So there's, a silver rich horizon sitting right above the Fernandez zone that was pointed out in the 43101 from 2013. So we're excited to get back here, but the opportunity to get into cash flow is what will allow us to unlock the potential of San Diego. Here's a slide that our geos put together, just listing some of the big silver rich resources in Mexico and the potential that we have at San Diego. And you have obviously Pitarrilla and Cordero that are much bigger than the rest. And then our geos think we're sitting right here, number 3.
That's impressive.
So there's a lot of silver here, and our company's well set up to take advantage of this secular move in silver prices.
Thanks for that. Hey, Don, can you, we've got 6 minutes, so I'm going to let you take the rest of it here.
Yeah, this is a very exciting story here. Basically, we get San Diego for free because the valuation of the company is less than La Parrilla. So the one question I have for you on La Parrilla is, what do you think the head grade is going to be? We got 1,250 tons per day, but what are you expecting the head grade to be?
So we expect it to be right around the resource grade, and in some cases higher. So the resource grade on average is between 255 to 280 grams per ton silver equivalent.
Okay, so that's going to be more than 2 million ounces a year, correct?
Yeah, if you do the calculations, you're going to be getting closer to 3. Of course, I'm not supposed to, give projections and that kind of thing, and we're not. So if we do go into operations with those parameters and those grades, that's what you're going to get out the back end. So it's going to be very special.
Yeah, I've been saying that at $100 silver, if you have $50 break even cost, you have $50 in free cash flow. So 1 million ounces times $50 is $50 million in free cash flow. So if you have 3 million ounces, it's 150 million at $100 silver. At $100, which I think we're going to hit in 2 to 3 years. So this project, just La Parrilla alone, could be worth over $1 billion, and your market cap right now is 177. So, like I said, we're kind of getting San Diego for free here.
And remember, San Diego on its own, before we bought La Parrilla, albeit for a cup of coffee, we did hit $100 million valuation just on San Diego alone when we were drilling it back in 2020 and 2021. And silver prices are a lot higher today, and the silver hasn't gone anywhere. And I think it gets even better. This is a the historical production and costs that were put out by First Majestic when they operated. And you can see at the bottom their C1 costs. They averaged over that period of time $8.46. So even if you double that or triple that to get to an all-in number, our margins are much better than what you were suggesting earlier. I mean,
right. Yeah, $50, right, exactly. So what do you think your AISC's going to be at La Parrilla when you start it up?
We haven't published any numbers, but you can look at the averages in country, and
Well,
we'll be better than that.
right. So I mean, you're close to production. So why haven't you published any? You haven't done a PEA for restarting the mine?
We have not. Our review was we have 13 years of data from First Majestic. We didn't need to do a PEA.
Okay. Okay. So you're kind of going on there. Because we've had quite a bit of inflation since 2018. So it's kind of difficult. So basically, we're going to, as investors, we're going to kind of be in the dark until you actually report your Q1.
I don't think you're in the dark. I think investors need to read between the lines a little bit. If you look at the last numbers that First Majestic published, and even if you just inflated it by the rates of inflation, or you just looked at the average published numbers for Mexican producers, you'd see that that average number that's published is in the 19 to 22 range. We're not going to be far different than what others are experiencing in Mexico. Remember, this is one mine. It was always
right. So you should be around a $20 ASIC just for the silver. So you're going to be mining 60% silver. So this is net cash, net of byproducts. So your cash cost is going to be around 50. We had a little bit of inflation, so it's going to be probably $16, $17. So your ASIC is going to be around 20. Is my guess. You don't have to say anything, but you're basically going to mine around 2 million ounces of silver, 3 million ounces silver equivalent. That would be 66. So silver, you should be a little bit under 2 million, correct?
You're very close to what it's pretty clear from when you start reading between the lines. Most people will come up with numbers that like what you're mentioning. Yes.
Right. So you should have, when you get into production, somewhere north of 50 million in free cash flow. If silver prices go up from here, your free cash flow should be around 50 million a year, which depending on what valuation they give you, you should go up substantially once you get into production.
Substantially. If you go back and look at 20-year run on the data in a good market, gold companies cash flow multiples were anywhere from 5 to 10 times, and silver cash flow multiples, because it's so rare, so much rarer.
Yes,
you would get up to 20 times.
Absolutely.
Cash flow. So
absolutely.
Obviously, I'm limited in what I can say, but if somebody cares to do the work, they can see that these silver valuations, not just for our company, but for other companies too, are going to go ballistic.
Right. Also, you're going to get some value for San Diego, so your multiple is going to be a little above average. So I couldn't agree with you more. So yeah, it's going to go up substantially. But the beautiful thing about your company is your pipeline is San Diego. Again, we're kind of getting San Diego for free, so that's fantastic. Well, Greg, we're out of time here because poor John, he's got an appointment he's got to go to, so we got to wrap it up.
Yeah. Okay. Thank you, Greg. We really appreciate the overview and learning more about Silver Storm. As I mentioned, the tickers are at the bottom of the presentation there. We'll also have those in the show notes for all the investors to look at. It's an interesting story. And as you pointed out, Greg, not a lot of sober stories out there right now when you look at near-term production stories this cheap. So this is John and Don signing off Feneck Commodities Report, and any investors that have questions, please feel free to reach out to us, and our contact info is in the show notes. Thanks, everyone.